Hey everyone, welcome in to another daily editorial here on the KE Report and here on Canada Day, July 1st. I'm chatting technicals, gold technicals with Jordan Roy-Byrne, founder and editor of the Daily Gold. Now, Jordan, we're seeing a bit of a reversal in gold, silver, the precious metals, even some of the precious metal stocks today. However, the most important thing I think was yesterday's close for the quarter, for the month. You look at something like gold, and it was the second highest ever monthly close. The highest monthly close back on August 2011 when gold closed at 1826, only $26 away from that level. A strong close to the month. We are seeing that pullback today, though. What do you think is causing that pullback today? How encouraged were you by that close yesterday as well?
Well, Corey, first, happy Canada Day to you and all the listeners out there in Canada. Now, with respect to gold and the close yesterday, I think it was, I was happy to see that, and silver as well. Silver's monthly and quarterly close yesterday were pretty good. But note that yesterday, I don't know if you said it, but we were talking about it beforehand. The quarterly close in gold, the previous all-time high quarterly close was 1774. So gold closed well above that. It's a new quarterly all-time high. But I think there was some end of the quarter window dressing, Corey. I think, end of the quarter, the books close. And so sometimes a really strong sector gets juiced a little bit at the end of the quarter as fund managers want to show they're invested in that sector. They want that on their books. So I think it was some end of the quarter window dressing. So I'm not surprised that we're seeing kind of the opposite effect today, which is a sell-off. If you look at the daily candles for gold and silver, they're kind of bearish. They look like, with respect to gold, it looks like it's reversing the strength from yesterday, and silver traded up earlier, and now it's much lower. So if we're looking at the daily candles, that's bearish, Corey. But I'm not too concerned with that. It seems that, and I know we'll get into it, but yes, the monthly and quarterly closes were very significant, and it seems that there's kind of an undercurrent building of momentum and speculation in the sector.
Now, it really does when you look, especially at some of the stocks and some of the junior stocks, some of the ones that haven't really moved with this move higher in the majors, the minors, even some of the high quality juniors. There were kind of this group of stocks that I think everybody has, at least in their portfolio or an eye on, saying, man, I just really want this stock to move a little bit higher so I can rotate some of this money into something else. Unfortunately, a lot of these stocks really hadn't been moving, but it's one thing I realized in just the last couple days to the last about week and a half is that some of these stocks with marginal deposits at best, they started to get a buy. Just shows a lot of optimism or speculation, I guess, in the sector. Is this what you're paying attention to, Jordan? Barometer, in a sense, for more money that seems to be flowing in, or people that seem a bit more optimistic?
Yeah, and it's really interesting because you can't really. You could quantify it by looking at various stocks, but it's more of a qualitative observation. And this is something that we've been talking about. How, my guess has been first when we see GDXJ take out the 2016 high, that will really help build speculation and momentum in the sector. And when gold takes out 1800 or 1900, that's like the final opening of the gate as far as speculation and momentum filled moves. And so I think in the last week or two, what we're seeing is kind of the start of that, the early signs of it. And even in the last week or two, like if you look at something like the Dow Jones US Gold Mining Index, which is heavily weighted towards the biggest names in the sector, it's heavily weighted towards Barrick, Newmont, Agnico, Franco. It's actually been pretty weak. It's nowhere close to its high. Yet, yesterday we see GDXJ making this major breakout. So the juniors have been leading this move. The GDXJ juniors, which is kind of like the senior juniors, have been leading this move. But as you noted, even if you go down the food chain, a lot of money is starting to flow into those stocks. And so I think Um, conventionally speaking, people would say, oh, well, everybody loves gold and juniors. Like, this is a bad sign. Sentiment is too bullish. But it's something we've talked about in the last couple of years, once or twice, Corey, is when you get a big breakout in something, the sentiment, it actually tends to be bullish when that breakout happens. And then you get the move after the breakout. Sentiment tends to be hot or remain bullish for the duration of that move. So, people who are kind of sitting and waiting, like, we're going to get this big correction or we're going to get this big washout. It's always possible, but I think it's more possible that, the corrections are going to be short and swift and that the sector could continue to run. That's the real risk, for the rest of the year over the next 12 months. And I'll go back to the technicals, Corey. GDX had already had the big breakout. It basically retested it successfully at 31. It retested it twice on the daily chart. And now we have GDXJ has yesterday broke to a new fresh 7-year high. So technically speaking, if we look at the upside after those breakouts, there's still a lot of upside ahead. And again, looking at what's happening qualitatively, where we're starting to see speculation in the sector, I think it's more likely to continue than not. And just the last point, silver in 1875. That's a really key level because other than 1875, there's nothing between that and $27 other than 21 silver. So there's basically in the way of silver making a 40 or 50% upside move, you only have that resistance around 21. And same thing with gold, trading at 1800 now, all that's left is 1900. So technically, these markets they're in the areas where there is the risk of seeing these moves where speculation really increases and momentum really increases. And it's a long time coming for this sector, Corey, because we've been for the last several years, we've been in the mode where, this kind of strength doesn't sustain itself, it gets sold. So we haven't seen these types of moves for almost a decade. And so, investors who haven't been around that long, they forget what those moves are really like and how they can really stay extreme and continue to rise.
Yeah, you and I have been around for that long, and I do remember those times when just everything moves aggressively higher. It's kind of crazy to think right now that we have gold right around all-time highs, no matter which close you might look at. Fact of the matter is, gold is knocking consistently on some all-time highs, but the stocks are still well off their highs. Silver is still well off their highs. Yeah, we're starting to see a little bit of catch-up being played by the stocks, but Jordan, what does this environment tell you? Is it just so early stage right now with gold already at highs? Usually when gold was making a run towards 2000, it had been on mainstream media's minds and on the headlines for months, if not years. It's just starting to break into, let's say, CNBC. But again, it's just gold that is at all-time or close to all-time highs because the stocks, silver, everything else is lagging so much.
Yeah, an interesting thing with gold, I saw a great chart where it was basically looking at the flows into GLD versus the flows into the stock market. And that chart has, in the last week or two, has just broken out to a new 7-year high. So, and if you look at that chart, you can see that as far as money flows, like that move really hasn't even started yet. Like when you get that kind of breakout, there's huge moves that come after that move. So with respect to sentiment, it is interesting because I anecdotally, I agree with what you're saying. It doesn't seem that people are really talking about it the way they were 2010, 2011. But again, if you just look at the technical setup of the sector, GDX emerged from the 7-year base. GDXJ just broke out yesterday. Silver is trying to break through 1875. So, when you have these long bases that last several years, people just get kind of, they just stop caring about the sector. They just look at it as dead money. Then even after the breakout, it can take them some time to really start paying attention. And just, again, when you have a base for several years and you break out from that base, it's just so bullish. So, I mean, what we're seeing with respect to GDX and GDXJ, it's at the beginning of the move. I mean, again, it's at the beginning of the move. So there's a lot of upside left after these breakouts.
So, Jordan, is then simply the strategy just put your money at play and don't allocate, obviously, all of your investing capital into the sector, but what you do want to put into gold stocks or silver stocks, you really should have them in now, not get too cute, not wait for a big correction just because it might not come?
Yes, for the most part, yeah, it's too late to be waiting for a correction. Now, if you're looking at, I mean, if you're buying individual stocks, then I mean, you can find some that look. It's a market of stocks, so you can probably find some that haven't moved as much and are more undervalued, and so there's a better chance that those types of companies that they have a lot more upside left. They'll really outperform. You can find stocks like that. Versus stocks that have already made a huge move higher. I mean, the ones that have already moved the most, and this happens in gold bull markets, is the senior producers. Like, they've moved a ton already, so you're not going to get as much upside if you're owning senior producers. It's really, you have to go down on the food chain. And look, just simply put, you make the most money in a bull market by buying and holding. So buy, hold. And look, if something goes down more than 20%, you should sell it. Or if it's underperforming, swap it for something better. And when you're making money and things are moving up aggressively, trim your big winners along the way. Let them run, but trim them by selling, bits and pieces, a third, maybe a half. If it's up a lot, it's, a risky explore co. But other than that, I would say just keep it simple. You got to buy and hold. You got to take advantage of weakness. And you have to ride the train because this move is just getting started. And I mean, I like what some other people said. It's a wealth building phase. We could be going into a wealth building phase over the next 12 to 18 months in this sector.
And finally, hey, which is very nice. Now, 12 to 18 months, what gives you that time frame? Some of the arguments I've heard is that this base has been built for such a long period of time, and it's such a solid base now that it could be a longer bull market than just a year and a half.
Well, first, if I tell you only 6 to 12 months, then I sound like a perma bull. But secondly, stepping out, and I don't want to babble on here for too long, but stepping out, Corey, if you look at, and this is something that we may have talked about before, I can't recall, but if you look at, these types of bull markets in precious metals, how they begin while there's still, a bear market or there's still a recession, even when the economy recovers and the S&P starts running again, these types of bull markets in gold stocks can't continue for several years. I'll just give you a history lesson. Go back to the Great Depression. I mean, that move in the gold stocks, I think, lasted really, I mean, you could say 1936, or 1937. But most of the gains were through 1935. So the bottom was the bottom in the S&P, or at least in the economy. I mean, there was another 3 years that gold stocks kept moving after that bottom in the economy in the S&P. You go back to the early 2000s, the bull market in the gold stocks, that started in October, November 2000. The S&P, the economy, I mean, the S&P bottomed about 2 years later. And even after that, gold stocks kept moving for more than 5 years. You look at what happened in 2008, a little different scenario, but even after the stock market bottomed, March 2009, gold stocks kept running for another 2+ years. So there's all these historical examples, say 2 years, 3 years, 5 years. So I think it's, 3 to 5 years after the stock market, or we'll say the economy, after the economy bottoms, that's what history is telling you. So yes, I mean, with respect to GDX and GDXJ and these very bullish bases, that particular move could be a 12-month move maybe. But the overall bull market could last, another 3, 4, maybe even 5 years. So yeah, people don't need to worry about, well, this move is only going to last for 6 or 12 months. I mean, this super strong move might only last 6 or 12 months. But as far as this bull market that we're in, it's probably going to remain so, I think, based on history and the fundamentals that we have now, for another 3 to 5 years.
All right, Jordan. Thanks for your updates. I know, very encouraging sector right now. I'm happy that I'm invested in some of these companies, and hey, some of the ones that were lagging are actually starting to play some catch up. So I like the strategy of recycling some of these profits, trimming positions, and moving money into some of the stronger companies, although they have already moved. But hey, I think there's still a lot of money that could come into this sector that can further push these stocks, especially the really good ones, higher. Jordan, great chatting with you. I will post a link to your website below. Have a great rest of your day, and hey, have a great long weekend down there in the U.S.